Welcome to the WuBlockchain podcast for the latest blockchain and crypto insights. Subscribe to WuBlockchain on YouTube and follow us on Twitter. Stay informed and join the conversation. Today, we are honored to speak with Andrew Keys, co-founder of the Ether Machine. Could you briefly introduce yourself and your background?
Well, first and foremost, thank you for having me on WuBlockchain. I really appreciate you spending the time with me, and I've really enjoyed coming to China multiple times. The first time I was there was with Vitalik Buterin in 2015, right when Ethereum launched. And so my background has primarily been at the intersection of capital markets and technology. And I helped build a company called Consensus, which created 3 of the 8 implementations of Ethereum, all the way up through some of the most used developer tools and web applications such as MetaMask, which is one of the most used developer or user wallets in the space. I also built a commodity pool operator and commodity trading advisor registered with the CFTC named DARMA, which is an acronym for Digital Asset Risk Management Advisors. And DARMA was one of the largest institutional staking platforms since the inception of proof of stake. And most recently, I've built the Ether Machine, which is tradable in the NASDAQ under ETHM. And the Ether Machine is an Ethereum treasury that we employ active management of our Ether through staking, restaking, and participation in DeFi. So shareholders are able to have access to Ether exposure with those additional yield generating benefits.
Ether Machine just raised $654 million worth of ETH. What's the vision behind this Treasury-Centric model?
Yeah, so the Ether Machine currently has $2.5 billion worth of committed capital, and that's about 500,000 Ether. And we just raised 150,000 additional Ether worth $654 million. And basically, what that investment was from was a large Ether investor that was very interested in having access to our operating business that generated yield through staking, restaking, and DeFi, and having a public NASDAQ traded security, ETHM, and wanted to ensure that they had pristine collateral and a pristine entity to invest through. Broadly speaking, there are 2 ways that one can employ a digital asset treasury. One is through the acquisition of a shell company, and many of these shell companies have pre-existing liabilities. I had 3 conversations with 3 different shell companies. One was a dying biotech company that's drug did not make it through clinical trials, and basically the CEO wanted to stay on board. And basically the CEO couldn't spell Ethereum and wanted me to pay millions of dollars for continuing ongoing salary. Another one was a Bitcoin mining company that didn't want to be a Bitcoin miner anymore due to the increased hash rate. And they had a data center lease that was millions of dollars, and they wanted us to incur the millions of dollars of data center lease. And these are just examples of the pre-existing liabilities that one gets if they were to acquire a shell company. What we did was we created a de novo, or a brand new LLC that was anchored with Ether. And then we are going through a merger with a special purpose acquisition company. And the special purpose acquisition company then merges with the pre-existing de novo entity, and now we have a clean operating business. And that was what this investor wanted. He wanted a clean entity and vehicle to deploy through.
So why is there no Bitcoin or other cryptocurrencies?
Yeah. So I believe Ethereum to be the substrate of the next generation of the internet. Simply put, Bitcoin can do one thing. I can send you a Bitcoin. With Ethereum, we can programmatically create any type of application. So while there is one use case and one asset on Bitcoin, there's infinite use cases with infinite assets on Ethereum. And what we've seen is that Ethereum is experiencing power law dynamics similar to Google with search, where 90% of high quality liquid assets are deployed onto Ethereum. And, the 80% of stablecoins are deployed onto Ethereum. And we believe that Ethereum will be the substrate of the next generation of the internet. Furthermore, Ethereum is a productive asset that generates yield. And we feel that that is extremely important to generate yield for our shareholders.
Was there a pivotal moment or trend like DeFi summer rise of staking yields that catalyzed this Ether Treasury-Centric model?
Well, I think there are a few things that catalyzed the treasury models. So the first was that we were able to market digital assets. So basically, that was an important consideration where accounting bodies within public companies would be able to market digital assets. And that happened in December of 24, that was passed. And we're seeing the confluence of political tailwinds that used to be political headwinds. The Genius Act, for example, is the Stablecoin Act, and that gave clarity for institutions to be able to custody and transact with stablecoins. And the largest beneficiary of the Genius Act is Ethereum, because the majority of stablecoins settle on Ethereum. Similarly, the Clarity Act that's coming up in November is the market structure bill that basically will give clarity around the tokenization of securities like stocks, bonds, derivatives, and we believe that will be another further improvement for Ethereum, because the majority of high quality liquid assets are settled to Ethereum.
Mm-hmm. You are preparing for a Nasdaq listing with over 495,000 Ether on balance sheet. How does Ether Machine position itself like holding company, on-chain ETF, or DAO-like cooperate?
Yes. So we believe we are much more than a holding company and are better exposed than an ETF. We're an operating company that generates income through the staking, restaking, and participation in DeFi of Ethereum. So basically, a holding company would just hold Ether and not avail themselves to the yield that Ether generates. The ETFs are only able to stake at a capacity that is less than full, meaning that they're not able to stake all of the Ether that they hold. And with our vehicle, we're able to stake, restake, participate in DeFi, and similarly issue convertible bonds and or preferred shares, which are credit instruments, to buy more Ether. The other company that did this similarly is MicroStrategy, and we aim to be the MicroStrategy of Ethereum.
Mhm. Could you explain NAV, market cap to net asset value, as a core metric and why it matters for on-chain public companies?
Yeah. The multiple to NAV, in my opinion, for uh for, for these public companies is important because basically what that shows is two things, in my opinion. One is the ability to outperform the staking yield that's generated by the ETFs. So if you think about the staking as a perpetual bond, we have the ability to outperform as a proxy, the European or Canadian ETFs that only stake at 50% capacity. And we're able to stake at 100% capacity. So if one does that, you have to consider, double the yield of a bond should equal double the price. And that's one consideration of the MNAV. Secondarily, MNAV can be accredited to the ability to issue financial instruments on the vehicle. And so in that example, you're able to basically have something like us where we can issue preferred shares or convertible debt that could increase the ether concentration per share, which should be attributable to MNAV.
Does MNAV create unique challenges or opportunities versus conventional equity valuation?
Yeah, so I think MNAV is a function, and basically depending upon one's MNAV, there are different types of financial instruments one should employ. For example, if somebody has an MNAV that is, greater than 2, or maybe even greater than 1.5, it may make sense to issue more equity because it may be slightly overvalued. But if it is less than 1, it may make sense to buy back shares because it is undervalued. And so basically, MNAV is a good barometer to understand what the value is being ascribed to the business, moreover than just holding the shares, or excuse me, holding the crypto assets.
Mm-hmm. So what role does staking and Ether native yield generation play in Ether Machine's business model? Can this approach sustainably outperform traditional ETFs?
Yes. So there's a nuance with the ETFs. So if one understands how an ETF works, it has to have 24-hour daily liquidity, meaning that if you are an ETF holder and you wanted to sell your ETF shares, the ETF issuer basically has to be able to redeem those shares in real time and give you your money back. And with that doesn't work well with the Ethereum withdrawal queue. And what I mean by that is that typically, if you were to unstake your assets, you would get your ether back in less than a week. Right now, there was a concern of a potential hack by one of the large staking groups, and they are unstaking all of their ether, and they have increased the withdrawal staking queue from a couple days to over 30 days. And this is very fresh news. And so that doesn't really work well with the redemption requirements of an ETF having to be 24 hours. And if there was some other black swan event, the staking queue, the withdrawal queue could go to 6 months or a year. So the ETF issuers, the only way that they can deal with this is basically by staking less. And right now, in America, the staking, the ETFs have zero staking, but in Europe and Canada, they're staking at about 50%. And so the way that we don't have, as an operating business, have that mandate where we have to have 24-hour redemptions. So we're in a position where we can stake at 100% capacity, thereby outperforming the ETFs.
So as a new way, how do you plan to communicate your own chain asset model to traditional market investors?
So we are able to do that on a monthly basis, where we give our guidance, and we have our quarterly reporting where we explain at every quarter our income, our ether generation, our ether capacity, and then furthermore, we've been working with some of the largest institutions in the world. So Citibank, for example, which is one of the largest investment banks on earth, is our banker, and they will be issuing research on us. So it's basically a way for them to communicate, to the analysts and traditional financial markets investors.
Do you also plan to utilize advanced yield strategies such as restaking or LRTs?
We do plan to use advanced strategies like restaking, and potentially LRTs. Out the gate, we're going to start with vanilla staking and then ramp up to the restaking and LRTs.
So why use a SPAC route instead of a direct listing? What advantage did the SPAC route offer given the crypto regulatory environment?
I'm sorry, could you say that question again, please?
Why use a SPAC route instead of a direct listing?
Okay. Why use a SPAC instead of a direct listing? So basically, we used the SPAC because we didn't want to have pre-existing liabilities. And what that means is the direct listings, all of these companies are essentially selling themselves because the operating business that they were previously employing doesn't work. And so basically, each one of these direct listings are previously failing companies. And when a company is failing, there are problems typically with the management, the operating business, the governance, the cap table, and maybe lawsuits. And what we didn't want was, we didn't want to inherit any of those liabilities. And by going the SPAC route, we have a clean operating business that is a brand new entity that doesn't have any of those issues. And we believe that's the best way to move forward.
So what advantage did the SPAC route offer given the crypto regulatory environment?
Well, what we believe that this will offer is that we believe that we're going to be in a position to have the cleanest, most institutional facing operating business for Ethereum in the public markets. And by having an entity with no pre-existing liabilities, no pre-existing business, no pre-existing governance issues, no pre-existing operating management that we have to contend with, we are also able to have a Big Four auditor audit our books. And in doing so, the bulge bracket banks are going to be able to work with us to essentially issue different types of financial instruments besides the ATM equity issuance. And what we've seen from my perspective is a bit of exhaustion in the ATM equity issuance space. And so basically, we believe that we'll be able to be first to market with different types of financial instruments like convertible bonds or preferred shares.
How did you design this capital structure, convertible debt, preferred shares to avoid crypto dilution?
By definition, uh, we create these instruments. So we have not issued any of these instruments yet, but basically, depending upon the instrument, is how one would have to kind of conceive potential dilution. So, for example, an ATM issuance with an MNAV under 1 would be dilutive to shareholders. If the MNAV's under 1, what one should be doing is buying back shares. Furthermore, if one wants to create different instruments like preferred shares or convertible bonds, they can issue them at a premium, and therefore those could equitize at a higher price. So that would be another way of accretive issuance, and then basically we'd be buying the underlying asset, so that could create an increase in the Ether concentration per share.
Is Ether machine paving the way for a new class of on-chain public companies? What would make this model sustainable long term?
Well, I think what we're doing is unique and differentiated and difficult. I think that what we'll see is there are a lot of lower level efforts where dying microcaps are being acquired through reverse takeovers or direct listings, as you've mentioned, and we're taking the road less traveled and going the route that protects investors' assets the most.
You've raised funding from names like Pentaverse, Blockchain.com, Kraken. How do you balance institutional interest with maintaining Ethereum native values?
Great question. So we are Etherheads, right? So I've been part of the Ethereum ecosystem since before Ethereum launched. And what we believe is that this vehicle should help mainstream adoption of Ethereum. And basically what we're doing is we're creating a financial instrument in this public entity that institutions can have access to in a way they're used to. So you're not going to get large scale institutions setting up accounts at, Huobi or Coinbase or Kraken, and dealing with public private keys. They need to have, a stock, and this stock is perfect for that type of exposure. But what we're doing is we're one pillar of the Ethereum ecosystem. And basically our role is to explain to both Wall Street and Main Street what Ethereum is and what its power is. And basically by having this vehicle, it gives us a microphone and a responsibility to educate Wall Street and Main Street on the powers of Ethereum. So we believe that we are being stewards of the story and explaining it to Wall Street and Main Street. And we believe that's aligned with Ethereum's values and interests.
What does Ethereum native values mean for a public company?
What are Ethereum values for a public company? So basically what I think is that Ethereum gives a price discovery mechanism for the value of intermediation. And what this public company is doing is acquiring an asset that we believe will be very valuable in the future, which is Ether. And that will avail anybody who has a brokerage account in the world to basically acquire this, and then not have to deal with the concerns around yield generation and having a professional team manage that, and the custody aspect that could be problematic with public-private key pairs and holding those assets. And with that said, the values that we will be teaching are the values of the use cases of what Ethereum is able to demonstrate and what is able to be built on top of a protocol like Ethereum.
That's cool. The Ether machine now ranks among the top 3 Ether treasury holders globally, only behind Tom Lee's BitMine and John Rubin's Sharplink. How do you differentiate your strategy from theirs? Is it about staking, corporate structure, or public market access?
Well, I think it's all of the above. I think one differentiation was our insistence that we have a clean corporate structure and didn't inherit any pre-existing liabilities of an operating business prior to this. So I think that's one, and this is kind of the only pure play institutional investor driven Ethereum vehicle. Secondarily, I think that we differentiate ourselves in that we don't outsource asset management. In other vehicles, there is an outsourced fee to an asset manager that could be dilutive to shareholders, and we believe that is another differentiator. Third, we believe that we've been staking since the inception of proof of stake and understand the rewards and the risk contours of generating yield, and we'll be doing that safely. And then last, we believe that because we have this de novo entity that is the cleanest vehicle with a Big Four auditor, those are the necessary factions to drive the convertible bond or preferred share flywheel. And that is the next, I think, topic that in time we'll be approaching is how do we grow our Ether concentration per share in a balanced method where we can use these different financial instruments. And I think we'll be uniquely positioned to do so.
Do you see this as a race to become the MicroStrategy of Ether, or is your vision fundamentally different?
Well, I do think that there are values with scale, and I think that all of the three of these entities that you mentioned, ourselves, Tom Lee's vehicle, and SBET, are what I would call like a critical mass of size. Talking about multi-billion-dollar treasuries already is huge. And then I think that being the largest isn't necessarily the goal. Our goal is to generate the most Ether per share. So how do we most effectively generate the next incremental Ether? And that, I think, is the most important North Star.
As more listed crypto treasuries emerge, how do you foresee the relationship between on-chain companies and traditional capital markets?
I think they're all going to merge, right? I think we're going to see a merger of, DeFi and TradFi just become finance. And what we're going to see is that Ethereum becomes the substrate for the next generation of the internet. And I think that that's going to be exciting. And we're going to start really seeing the values of tokenization, the value of smart contracts, the value of this technology being employed in production.
How critical is SEC compliance and legal clarity to Ether machines' operating model and investor outreach?
So I think that I think it's imperative and absolutely critical. But the good news is we've already gotten, the majority of the regulatory clarity needed. We've had the SEC reaffirm that Ether is a commodity, not a security. We've had the stablecoin legislation that recently passed, and the largest beneficiary of that is Ethereum because the majority of stables settle to Ethereum. And I think the third and other kind of momentous bill, which will be clarity, is coming in November, which will further work on the tokenization of all assets.
Are you expecting challenges similar to what Coinbase or Kraken staking products face?
No, I am not. I think that we understand the staking business very well, and have been doing this from inception. So it's basically just taking the know-how that we've employed at DARMA and bringing it to the Ether machine.
Is regulatory risk a limiting factor for expanding into other assets or on-chain strategies?
No, regulatory risk isn't a limiting factor. This public vehicle, is for Ether exposure and Ether denominated yield. What we found from talking to institutional investors is they want pure play exposure to assets. They don't want a basket of assets. And we believe that having this pure play exposure where we have a pristine vehicle that is able to do best in class yield generation safely, and it is able to issue convertible debt and or preferred shares, is the best play for our investors.
In the future, will Ether machine introduce a token or DAO governance layer?
Probably not. This is a public vehicle that is currently on the Nasdaq, and the token, if you will, is the security, which is the equity of ETHM.
And anything else you'd like to share with our audience?
We believe that this is the best way for public market investors to have Ether exposure, and we believe that we are uniquely positioned to safely generate yield and issue financial instruments to acquire Ether and to generate Ether generation per share safely as possible.
Okay, thank you for joining us today and sharing your insights.
Thank you.